Welcome. Today, in this training, we are going to talk of Forex market and quotation. We are going to look at how to make money from Forex trading. What are currency pairs, major pairs and cross pairs, overall market structure. Why is market structure so important as a Forex trader? Now let's look at how to make money trading Forex. There are various ways you can make money as a Forex trader. Apart from trading, apart from actively trading, there are various ways you can make money. However, in this training, I'm focusing on teaching you how to make money trading. Yes, other means of making money without trading will be faster if you understand how to trade by yourself. So the goal is to teach you how to make money trading Forex. Now, the first step to do is you must study everything. Anything you know regarding Forex, you must study. Your success depends on study. And when I mean study, it means that you have to study and comprehend. After that step, the next thing is to get a broker. A broker is a middleman between you and the bulk of the market. So the broker is the one that converts your local currency to the major tradable currencies in the world, which could be Euro, USD, GBP, and others. So by the time you are done studying, you get your broker. The third one is you have to analyze the currency pairs, determine the pair that will rise against other in value. Then you invest or trade through your broker. The first step is, in a nutshell, to make money trading Forex, you must learn to buy and sell currency pairs through the broker. That is a simple way of making money trading Forex. Buy, sell through the platform a broker provides for you. What are currency pairs? Currency pairs are two currencies traded against each other in Forex market. Now, we don't trade one currency in market, we trade them in pair. Now, remember what you're trying to do as a Forex trader. You want to trade a pair that will, a currency that will appreciate against another one. Buying and selling means you have to buy one currency and sell the other one simultaneously. So this is what we call the pair. We have Euro USD as a pair, which is equal to 1.105. This means that 1 Euro USD is equal to this value of 1 Euro is equal to this value of USD. That is what this means. So the currency pair, it must come in pair. Now the first currency like this is called the base. The euro now is the base, and the second one is called the quote. And now let me tell you how it works. You buy the base or you sell the base. What happens is once you buy the base, obviously you are simultaneously selling the quote. Or once you sell the quote, obviously you are buying, once you sell the base, obviously you are buying the quote. So don't get yourself confused. It's all about buying and selling of the base currency. You have done your analysis and you think euro will appreciate against dollar. You tell your broker, put my money in euro. Now, if for any reason you feel, oh, euro will fall against dollar, what you do, my broker, sell euro. So once you are selling euro, USD is appreciating automatically. So euro is the best currency and USD is a quote currency. Major currency pairs. These are the major currency pairs. Why do we call them major currency pairs? They have high liquidity in the market. They are one of the most traded, or they are the most traded pairs in the Forex market. These pairs are the most traded and have highest liquidity in the Forex markets. Euro USD, GBP USD, USD JPY, USD CHF, AUD USD, USD CAD, New Zealand, US dollar. These are the major currency pairs in the Forex market. Now, what are cross pairs? These are pairs that has nothing to do with dollar. Yes, pairs that has nothing to do with dollar. Assuming, okay, let's read it out. Cross pair in the forex market are currency pairs that do not involve the US dollar. Instead, they involve direct trading between two other currencies. For example, Euro GBP, AUD JPY, Australian dollar JPY. All these are cross pairs. These pairs allow traders to bypass the US dollar. Are you getting it? And directly exchange currencies. So once you are trading pairs in the forex without involving US dollar as part of the pair, you are trading cross pair. Most cross pairs are not liquid. We don't have much volume of them. So these are examples of cross pairs. You can see there is no dollar. These are cross pairs. These are examples of cross pairs. They allow traders to speculate on non-USD currency relationship. What is a market structure? Take note. Once you don't understand the structure of the market, you cannot make money from it. If you don't understand the structure of your country, if you don't understand the structure of your classroom, if you don't understand the structure of life, how life is structured, you will not live it meaningfully. So you must understand what the structure of forex market is. The forex market structure refers to how price moves in a pattern on a chart. I put it in red, pattern on a chart. So the structure is the pattern of the market, the chart pattern showing the relationship between highs and lows. This pattern helps traders understand market direction. Yes, if you don't understand the structure, if you don't understand the market, you can't understand the market direction. And it's only when you understand the market direction that you take trading decisions. There are three main types of market structures. The uptrend, we call it the bull market. In an uptrend, what happens? The price keeps making higher highs, or the price of the base currency keeps going high and higher lows. This means that the market is moving upward, or the buyers are in control. Whenever you hear of bullish market, know that the buyers are in control. Bullish market entails the market price going up. That's why I said imagine like walking uphill. You take a step, or you take steps that move you higher than the last position, or you climbing a step. That is how it works. So we have the uptrend. This is the diagrammatic show of how it goes. You can see the market goes, retrace a bit, goes as in step. Your next step should be higher than the previous one. This is the first high. Now the second high is higher than this, and the third one is higher than this. This is what the bullish market entails in the forex market. Now we have the downtrend, which is called the bearish. In this case, the sellers are in the market. The sellers are in the control. What does price do? Price do lower highs and lower lows in the market. When the market is in downtrend, the sellers are in control. Think of walking down the hill. It's opposite of what I've just discussed, and this is how it is. The market is down, it makes low. Then the next low will be lower low. It must be lower than the previous one. So this is, and the retracement should be lower high, lower high. So the market could either be going up, going down, and lastly, sideways. When there is indecision in the market, when there is no clear direction of where the market will go. In a sideways market, price moves between a fixed high and low without clear direction. The traders are indecisive. Neither the buyers nor the sellers are in the market. They are just testing the strength of one another. Yes, it is moving back and forth on a flat ground. That is how you are going to look at it. So as time goes on, you will understand what to do, or why is the market structure so important. It helps you to identify where the money is. It helps you to identify the trend. Remember, if you go contrary to the trend in the Forex market, you will lose. So you must move in the direction. That's why the market structure is very important. And that will tell you when to buy or when to sell. If you envisage that the market is an uptrend, obviously you are looking for a position to buy. Or if it is in a sell market, the trend is downward, then you will look for a point to sell. That is why it is important. Avoid trading the range market. Anything unclear, once you cannot dictate the trend, whether this is going up or down, once you cannot dictate it, avoid that market. It's as simple as that. Some people do it. However, most times they are breakouts, and if you're on the wrong direction, the breakout will wipe you out of the market. That is why it is very essential to trade a very clear market. In summary, Forex market structure is like the roadmap of price movement, helping traders read the market and decide when to act. With this, you can confidently tell where the market is. There are various ways, take away from this video, there are various ways to make money from the Forex market. Yes, you can't make money from the market if you are not ready to soak yourself into learning. You can't make money if you are not ready to soak yourself into learning. Understanding the market structure is the gateway to your financial freedom from the Forex market. You must, if you have a good broker, you have a good capital, have everything, but you don't understand where the market is going, that means it will wipe out your money. So that is the takeaway in this video. Thank you for watching, and go to the next video where we'll proceed on teaching you exactly how to make money trading Forex.